Yeah, there's thousands of reasons to say no to a startup, and you can choose any one of them, and you probably would be right 99% of the time. But you want to be biased towards saying yes, so that you're saying yes to the ones that are going to do really well. So that's the thing. Like, you can find an excuse to say no to every single startup all the time, but you shouldn't. As a VC, we need to be looking at reasons to say yes, not reasons to say no.
That was the voice of Hasan Haider, founder and managing partner at Plus VC. I am your host, Ali Zwail, and this is the Startups Arabia podcast, where you learn about the Arab startups ecosystem from the best founders, investors, and operators in the region. Welcome to the Startups Arabia podcast. My guest today is Hasan Haider. Hasan has over 20 years of experience investing in MENA startups. He's the founder and managing partner of Plus VC, one of the most active early-stage venture capital firms focused on the MENA region. He was previously the managing partner MENA at 500 startups and led the firm's growth in the MENA region, turning it into the most active VC fund in the region, raising and deploying the 500 Falcons fund, building partnerships and running programs in the region to help build the regional ecosystem. He's invested overall in more than 250 regional startups. Prior to 500, Hasan was a co-founder and CEO of Tenmou, the first business angels organization in Bahrain and one of the first in the region. His work in angel investment in emerging markets through Tenmou has been picked up as a case study by the World Bank and was taught to entrepreneurship policymakers at Babson College. Previously, he was in finance and investment banking at Sico, where he spent a number of years. I hope you enjoyed this full of experiences and interesting stories interview with Hasan. Welcome to the Startups Arabia podcast. My guest today is Hasan Haider, founder and managing partner at Plus VC. It's one of the most active VCs in the region in terms of number of deals, which is something really cool. We're really going to dive into the more than 200 deals he's been involved in, I guess, as we have the discussion. Very happy to have you here today, Hasan.
Happy to be here. Thanks for having me.
Thank you. So maybe we can start at the very beginning. You studied economics at college, and you went, in the typical career that you would expect. You started in investment banking, in your country, and then suddenly you decide to do an online DVD rental company. Why? What made you do that?
I don't know. I think I've just been crazy my whole life. I'm just honestly, when I first graduated, I thought, as everyone does, I'm gonna go into banking. I'm gonna have a great career. I'm gonna be an investment banker or whatever, and I'll have a really nice life there. I was lucky. I ended up working in a really great place called Sico Asset Management here in Bahrain, and I learned a lot of really good habits of building a team, building working together, how to work in a professional environment. But at one point I started to feel like I wasn't really doing anything with my life. Like, um I was moving numbers from one Excel sheet to another, and that was kind of it. So, like, I talked to the CEOs of these companies. I used to do investments in listed equities, and so whether I invested in a company or not would make no difference whatsoever to the CEOs of those companies. So, like, it wasn't like meaningful, and it was good. I was good at it, but like I didn't have meaning, right? And so I ended up deciding to, let me launch my own startup. And I love movies. I watch a lot of TV and movies. And so I ended up thinking, hey, let me do this thing, because Netflix at the time was just DVD rental. It wasn't streaming. I was like, let me do the same thing as what those guys are doing here in our region. And I made all the mistakes. There's not a lot of mistakes. I think I did all the mistakes that now, looking back, I was like, oh, you shouldn't do that, shouldn't do that. It's because I did it, and like it didn't work. And so that gave me a sense of, yeah, I'm doing something something that I really enjoy, something that's close to my heart, as well as I'm having an impact. I'm building this thing, right?
Right.
So that was the reason. Like it was looking for, I guess, meaning. Oh, was the thing.
Hmm. And was it were you looking at it as a startup? So that keyword, was that like in your mind at the time, because it wasn't really the vogue at that time, or was it just a business that you thought about?
No, I initially thought of it as a business, but then I was using Netflix as the thing that I was looking into. And so I read a lot, right? So I constantly want as much information as possible. And whenever I have a spare minute or two, I'm reading about something, and it's always random stuff. But in reading, I started to read about the history of how Netflix was funded and founded, and what that ecosystem looks like. What is venture capital? What is angel investment? Mm. I started to really uh, understand that, hey, there's this entire little universe of things, of finance plus technology plus things that I enjoy, that's actually quite interesting. And so then I started reading about the history of Silicon Valley. I started reading about all the other history that's out there. And it was super, super cool. Because one of the things, maybe it's really, earlier in my life, I had a path, I had a choice to decide whether I go into computer science or I go into economics and finance. And I was making that choice after the dot com bubble burst. And
Right.
so obviously I was like, oh, there's no future in this technology stuff. I really enjoy it. I love this. I love like computers and science, computer science and stuff, but there's no future. Let me just go into
Yeah.
it. So yeah,
So yeah, you never know, which shows how much future planning works, right? Yeah.
there's no such thing, man. Like I've fallen into every single step of my career. Right, like it wasn't a
Yeah.
designed path to be where I am.
Right. So speaking of, I mean, of falling into, can you tell me? I mean, you eventually end up closing this startup, and but you're still affiliated with your bank
Mm.
or your investment banking career, and then you decide to leave all that and to start to go even deeper into startups by starting an angel network in a country that
Yeah.
is was historically a financial hub, of course, for the region, but has a very small market. And so, I mean, starting an angel network in Bahrain doesn't seem that obvious. I mean, how did you end up making that
So again, I guess I fell into it, right? So as I was making all of my mistakes in the startup, I was starting to try and raise funding from angel investors. I wasn't trying to raise a lot. Like at the time, I think I was trying to raise maybe 50 or $100,000 for like 50% of my business. Like
decision?
I didn't really know what I was doing at all. And I started to come across a bunch of the different sort of family offices in Bahrain, and one of the people that I met was my mentor, Sami Jalal. So he comes from a business family, Muhammad Jalal and Sons. They're a pretty big family here in Bahrain, and he for some reason took an interest in this kid that has no idea what he's doing, and he would meet me on a regular basis, maybe once a week, once every 2 weeks, and he would give me some really practical advice on the business and how to improve things and how to make things better. And I love that. I was like, I wish that I had met you and I'd had this advice when I was starting my journey in this thing, not now that it's almost too late. Basically, I've already made all the mistakes, and like I'm trying to
Yep.
fix stuff, but it's not really working. Um, and so one day I was there, and he's like coaching me again and telling me you should be fixing this, doing this in your financials. And then he's like, if you were in the US, you would have gone much further. Like, what's missing? And he's like, and I'd been reading, so I was like, we don't have angel investors in the region. Like, forget about in Bahrain. Like, regionally, there is
Yep.
an angel
That's
investor.
true.
And he's like, what is this angel investors thing? And this is like 2009, I think it was, right? And so I explained to him, I was like, it's people like you that have experience to give, but are also going to invest in startups. And so one of the things that he did is he's like, you know what, let's do that. I was like, oh, okay, that's that sounds cool. and, and so he became my champion. He became my mentor and really helped me out. And we started to meet his network of people. We started to meet entities within the government here. We got a really amazing supporter, Sheikh Mohammed bin Isa here. He was the head of the Economic Development Board and the Bahrain Development Bank, so he brought them in on board. And
Nice.
amazing people came together. And honestly speaking, everyone was putting in a very small amount of money into this company that we were going to set up for angel investments, but they were committing their time and they were committing their interest, which was more important to me than the funding.
Yep.
And so, yeah, and then we ended up about a year later setting up Tenmou right at the time when the financial crisis was kind of. It's
Yeah.
great. I've been through so
Perfect
many
timing.
crises. I've been through so many issues, like crises. I was like, you know what?
Yeah.
It'll pass.
Exactly.
Just keep working through it. And yeah, and so I had some amazing mentors, some of the best minds in the community, and they really were doing this to support the next generation of entrepreneurs here in Bahrain. Like that was their entire mindset and incentive, and we did it.
Which actually brings up like something. Your reply here is the importance of mentors. And did you like? How do you advise people to get mentors and engage them to support them? Because it's obviously made a difference in your life.
I think it's mostly like if you find someone who has something valuable and advice to give you and is willing to give you their time and that advice, you need to build on that, right? So it's not, you're not like go it the mentor mentee relationship, I think, is biased towards the mentor wanting to support the mentee. So you need to be someone that's coachable, that can go back to the mentor and tell him, hey, listen, this piece of advice you gave me, I tried X, Y, and Z, I did this, I did that, and keep building that personal relationship with your mentors. And I think that is a key sort of thing.
Yeah, so kind of building in a feedback loop so that the mentor gets positive feedback for the help they gave you, that hey, this is actually making a difference in this person's life. And because they're probably doing it for because they enjoy helping others. I mean, there's no other reason.
Yeah.
Yeah, cool.
Yeah. So I found some real amazing mentors, and so Sami Jalal, Fawaz Al Qasaibi, I had Mahmoud Kuiji, and a bunch of really cool people that I couldn't believe were willing to give me their time. And I learned, I was like a sponge. I was soaking from them as much as I possibly could.
Wonderful.
And, and at Tenmo, it was an amazing board, and they were all really, really supportive. It was great.
Yeah. And after Tenmu, you ended up having like a pivotal role in building up 500, their operation in the region. I mean, how did Tenmu lead to 500, or did it?
Yeah, so at Tenmu, I was seeing all of these startups from all around the region, because there weren't that many people in 2010, 11 that were actively investing equity in startups, and we were. And one of the things that I wanted to do really early on was I wanted to unite the regions rather than just do Bahrain and that's it, because I knew Bahrain is a small market, but there's opportunities everywhere. So I started this MENA Angel Investors Summit that we'd have in Bahrain, and we bought the other angel groups and some of the accelerators. I remember Flat Six Labs, Batch Zero, Aqal when they first got started, Cairo Angels. So I brought a bunch of people together. Like it was early on, and it was not huge, but in that I started to see really great deals in Egypt and Jordan. These were the two ecosystems that were emerging at that time, and then slowly the UAE as well. And the mandate for Tenmu was idea stage Bahraini sort of startups, and there's nothing I could do with them. At one point, I went to the board and I was like, "Hey, listen, I want to do something a bit more. I want to do a VC fund." They're like, "Well, we didn't know anything about angel investment until you told us what that was. We don't know anything about this venture capital stuff. You go and figure it out and let us know what you want to do." So I had this thesis where I wanted to do I wanted to invest in the MENA region, which was super nascent, and I wanted to diversify the risk out a little bit. And this is for my whole life is, let me, how do I mitigate the risk? And so I wanted to mitigate the risk of investing in a really early ecosystem by investing part of the fund in a developed ecosystem like Silicon Valley. So I wanted to do like half the fund in MENA, half the fund in Silicon Valley, and then raise it that way. So people that weren't interested in the region would still have to invest in the region because both are
Yep.
linked. I had no idea what I was doing, and so I ended up going on like what I call now the Disneyland tour to Silicon Valley. I met with a bunch of funds. This is what, 2013, I think, 13, 14. Met with a bunch of funds that all on their website says we are global investors. Um, and literally, like in one of the meetings, the partner that I met with, it was nice of him to meet with me, some random kid coming from the Middle East. But he's like, when I started talking, he's like, wait a second, where are you talking about? I was like, oh, it's the Middle East and North Africa. And he's like, just hold on. And he pulls up Google Maps on the screen. He's like, can you just point to where in the world you're talking about? I was like, what? Okay, so I know this meeting's not going to go well after this.
Yep.
But one of the people that actually was super interested in the region, had already invested in the region in a few deals, was Dave McClure at 500 Startups. And so um, I met with Dave, and Dave's like, "Sure, we can help you with deal flow in the region, in Silicon Valley, and we can help you with the structure." Invited him to the region a few times. He came and spoke at a few events in Bahrain and other places. And then eventually he's like, "Hey, listen, why don't we just join forces? Why don't you join us and help us set up stuff in the region?" And so I was like, "Yeah, why not?" So ended up joining 500 as the managing partner for the MENA region. While there, I built out all the really cool stuff that we did. We built out the brand here in the region quite well. We did. We had a really good portfolio. We raised a fund that was from, we invested from 2017 to 2020. We did 181 investments. So we invested in
Oof.
more deals than anyone else at the time. And I think that broad portfolio actually supported a lot of the next level of investors to invest at Series A and B. We were giving them enough deal flow that actually, hey, all of a sudden, this thing sort of makes sense. Yeah, there's enough deals for us to be investing in and looking at in the region. Um, so that was fun. Yeah, it's good.
And what were the main challenges that you met starting that machine up?
Uh, Honestly speaking, it was interesting. I mean, there was a lot of stuff going on at 500 at the time as well. So that was all the internal things that we had to work
Yep.
on.
Yep.
Other than that, related to the ecosystem, it was so nascent. Like I had to create my own LPs. Like I supported the development of the OTF fund in Oman, and then they became our LPs, and then supported development of the Al Waha fund in Bahrain, and then they became our LPs in the fund. So I had to go out and like create the pools of capital that would be investing in us. And Qatar Science and Technology Park, they were our anchors, and they also set up a fund that that then started investing in us and other startups and stuff, which is pretty cool. So it
Nice.
wasn't as straightforward. These are the LP sources. Go and get them and raise a fund. It was like, let you know, let's figure this out and let's build something from scratch. And then building out the brand was pretty straightforward for me. I think once you're active and you're an investor, and you're nice and you're collaborative with a lot of people, and that's sort of what I do. Even with Plus, that's our whole thesis.
Yep.
It happens. You
Founders
invest
tell
in
each
good
other.
people. Yeah,
Yeah.
you invest in good people. You're helpful, and it works.
And were there any major lessons from your time at 500? Any things you learned, like working in a global organization like that with so many investments all over the world?
Uh, I think like that the early days of 500, that's where I formed the thesis, and I really believe in what we're doing now. Like the diversification thesis: invest in a large number of deals, diversify out the risk, follow on the ones that make sense. Like that was for me, like, I'm a data driven investor, right? I'm a data driven person. I like data so that I can make a decision, and I like numbers. I like spreadsheets. Whatever I have to make a decision, I open a spreadsheet and I put in some numbers and stuff. So looking at the investment approach there was pretty cool because it made sense, right? I never thought it made sense to invest in 20 or 30 deals and you hope that one of them does 100x and then you do a 3x fund. Like, for me, I was like, hope doesn't work. I want a real investment strategy, right? I want a repeatable, sustainable investment
Yeah.
strategy. And so this works really well. And it has a lot of good benefits and externalities because it allows me to invest in deals that look super weird to the rest of the market, but actually are really great founders and they'll figure it out. One of
Yep.
my
Yep.
best performing deals is Callow, out of that fund. And Callow was just, hey, he wants to just deliver healthy food to people's houses. And there were so many meal plan companies out at the time. It just, and the founder had no clue, like Ahmed had no clue about food, logistics, any of that. He was a great developer, really, really really great at building out the product and stuff, but no idea about the logistics of food. But I was able to take a chance, and by investing in a large portfolio, you're able to invest in what I call non-obvious outliers. Like, they're not obvious to the rest of the market, but you see something that is different, and you're able to like take that chance and invest in that founder because of the large portfolio. So that's really, I think, one of the best things that I've learned. And that's how we invested at Plus as well. So that's following
Yeah.
the same strategy that we were doing there.
Yeah. Yeah. Man, it does make sense. And I recall seeing Dave at the Rise Up Summit in Egypt talking about that strategy and how it makes sense. And feeling, yeah, actually, I never thought about it that way. But you're like the positive externalities you mentioned are really cool, and I hadn't thought about that. And speaking of Plus and its strategy, tell me about Plus. I mean, how did it come about? Why did you? And what's the strategy in more detail? Let's flush out the thesis,
Sure, yeah.
the
And
size.
2020, we finished investing out of Fund One at 500, and it just came in time to make a decision. There were a lot of changes at 500 at the time internally, and I was just like, "This what I want to do," or because it was going to change our thesis and strategy, which I didn't want to do. So, do I want to do that and stay, or do I want to continue what I was doing with the Falcons Fund, the 500, but in my own thing? And so I was like, I want to continue doing what I was doing. I don't want to focus on accelerators. I don't want to do all this other stuff. I want to just be investing in really great companies. And so that was the thesis. And so um, launched Plus after we finished deploying out of the fund at 500. And Plus's thesis is pretty much we're investing at the seed stage. We try to be early. We try to be amongst the first institutional investors in a deal. And we invest a small amount, but we can lead rounds. We can set terms because there's a lot of investors that are followers, but need someone with experience to lead, and we're happy to play that role even with a smaller check. We're agnostic. We'll invest in anything as long as it's tech or tech enabled, but we are focused on the MENA region. We don't like in MENA. I believe I have a bit of a competitive edge. Outside of MENA, I'd be seeing the tier three, tier four deals. The worst of the worst that have already been passed on by everyone else is passed on. But here, I get to see deals first. I get to see them early. I get to invest at pretty reasonable valuations, and I really believe in this region. So Plus has been pretty cool. A lot of the team moved across with me from 500 to
500.
Plus, and now we have our first fund. We've done 53 investments already in the past 2 years.
Wow.
One of the things that was really interesting is people are like, "How are you just praying and spraying? You're just investing in so many deals." And I was like, "No, guys, if I saw 100 deals and I put money into 53, yes, that's what I'd be doing." But over the last 2 years since we started the fund, we've reviewed close to 4,000 deals that have come inbound to us. And so
Oof.
from
Yep.
1,000, we've invested in 53. So we really are pretty selective. We're only investing in the top 1 or 2% of what we see. So
Yep.
it's not pray and spray. There's a lot of work that goes into it, to make sure that we have a portfolio that we believe in. And that's worked pretty well. And that's where I'm saying, like, I think we have a little bit of a competitive edge in the region, because I don't think there's a deal that takes place in the region that I haven't seen or have access to through my network. So we kind of have full coverage in MENA.
Yep.
Outside MENA, I won't have that. So that's what we do.
So there's something you said that made me feel. I mean, on the website, you talk about investing in the diaspora as well for like 10% of the deals,
Yes,
but it
yeah.
seems that you're moving away from that part of the
Uh
thesis. Am I correct from
so
what you're saying? That because
So the diaspora thesis part of the thesis was we would invest in MENA founders anywhere in the world. We're still doing that on a limited scale, so we still do invest in MENA founders wherever they are in the world. But what we found is we don't have as much value to give those founders as we do for the ones that are on the ground here in the region. Um, and so we still find those deals really early, and we do have a bit of a competitive edge when it comes to like a MENA founder relocating from Egypt, for instance, to Silicon Valley. We'll still see that deal, right? But um, I think what ended up happening is, if it's in Silicon Valley versus here, it's a harder thing for us to really add a lot of value, right? I think that became quite clear over the last 2 years. So we're not doing that. We're just doing it less than we initially planned. I think is the thing. Yeah, and I think we'll still be opportunistic with that. But again, like, it's only because we have that competitive edge if it's a MENA founder that's left the region going somewhere else. Like, I won't go
right,
to Silicon Valley to source deals. That won't really work.
got it. And you mentioned like filtering out like from 4,000 deals to 53. So I mean, how many? Just to give our listeners a feel, how many emails from startups do you get every day, typically?
Oh, so this was the thing. I stopped, like, it I hate emails. Like, emails don't work, right? Emails, I there were deals that were getting stuck in my inbox for like 3 months, and I was like, I was getting to it, but it took so long to get to it that I was like, oh, like, I'm embarrassed now. Should I even respond to this deal or not? So emails just don't work for this thing. Like, I don't believe that emails are the right way to manage your deal flow as a VC at all. Like,
So
no.
what do you do?
Especially, so we built out our systems, like, we built out our own stuff. So what happens is we ask every founder that reaches out to us anywhere, we ask them, please, can you please apply through the website? And so now it's become a default, apply through the website. And so when someone applies through the website, it goes into a system that we've built on Airtable. So it's no code stuff, but with a lot of automation that allows us to review a large number of deals very effectively and efficiently, with response rates, with integrations to Calendly and Google and email and all these sort of things. So it makes our lives much easier. And my objective is to get to 100% response rate. To anyone that applies, they get a response from us. Whether it's a yes or a no, there's a response that goes out. That's the objective. We're getting there, but we're not there yet. But that's the objective. And so far, so good. That's working really well. It's not like an email CRM sort of thing. No, it's like we will only put you into our actual process if you've applied. And the application honestly just takes like 3 minutes. It's like upload your deck, put in a few numbers, and you're done. But it just makes sure that it's not getting lost in my inbox. It's not getting lost in my WhatsApp messages, which is a new thing that people are sending me decks on
Yep.
WhatsApp. And I was like, yeah, but can you please apply on the website? And so that makes life much, much easier. And all the process automation and optimization that we've done allows us to review a large number of deals with a small team, and
Great.
ensures that we can do what we
And
can do.
how many people apply every day, roughly speaking?
Uh, I What was it? I was looking at it. I think we get about 60 a week, so about 10
Wow.
applications or so a day.
And what makes an application stand out for Plus VC?
So the thing is, we want it to be as democratic as possible and give access to everyone to be able to get funding, right? One of the things that I don't like is in Silicon Valley, it's who's referred you to a deal, then someone will pick up the call and chat with you. Here in the
Exactly.
region, it's such a broad region. It's such a new ecosystem that some people just don't have that access. They don't have that network. Like, how is someone from Morocco going to reach out to me through? I mean, I'm accessible through a lot of different means. I think half of the world has my mobile number, but um, I don't believe in that part because you're missing out on founders that are really, really great, but just don't have network yet. So they're just getting started. They don't know people, and so why miss out on that, right? So our thesis was we can be their network. So anyone can apply through the website. We will review everyone, and anyone who is even slightly interesting, we will have a call with. So um, to tell you, like, out of 4,000, we've had detailed due diligence on 700 of those. So we try to give people as much of a chance as possible. We try not to reject stuff purely on a deck, because what we're really investing in is the team and the people. So we can only really get a feel from that from a conversation and a call and real interaction and stuff.
Right.
Um, so yeah, that's the thing.
So,
So
so how do people get to the calls? How do they stand out? How do they make a difference? Or is it more about the traction?
yeah, I mean, it's show us that you can execute. Show us that you're building something. um, I've seen founders that shouldn't even be called founders. Like, talk to them 1 month, and I talk to them 6 months later and 12 months later. What have you done? Oh, nothing. We're still trying to raise. Oh, we're trying to raise. Oh, we're trying to raise. I was like, dude, no. Your objective as a startup is not fundraising. Your objective as a startup is to build the company. So with whatever resources you can, if you really believe in what you want to build, start, like, figure out ways to, like, hack something together and launch an MVP. And it's not impossible. I've seen MVPs start for like $2,000 or $0 even, just to get some indication that there's a market and there's demand for what it is that you're building. So I think that's really the key. What I'm looking for is a bias towards execution, getting things done. I want founders that will get things done. That's it. Like,
Cool.
that's pretty easy to say, but hard to find.
So there are like people who worship at the altar of team, and some people who say no, it's all about market. The important thing is
Yeah.
their market for and some people are very product oriented. I mean, what's your bias?
No, I'm team. I'm 100%. Yeah,
100%
I'm
team.
investing in people. I'm investing in people. The product will change, the business model will change, even the market will change. And, like, it's the only thing that won't change at the seed stage is really the people that you're investing in. So I invest in people. That's people with a bias towards execution. The
Got it.
market size thing, I've heard it as an argument, and I think it's BS, because real good startups can create their own markets. Like, people that said no to Uber because of market size, right? Like, do you want to really make that mistake? And the answer is no, I don't want to make that mistake. So forget market. As long as it's not a super tiny niche and there's nothing else they can expand into, I'll invest in it. Even if the market looks small right now, there's potential for it to grow. And our region is growing, right? So B2B SaaS businesses or fintech businesses all looked like small markets, when I was starting 10 years ago. Who's really going to use a SaaS platform and stuff? It was like a whole thing. So I don't believe in that market hypothesis, because I think good startups create their own markets. We're starting from scratch in the region, and there's so many opportunities to create markets for things that you need. And product honestly doesn't matter. I've seen the shittiest products with huge customer adoption just because it's like solving a need for people. Like, yeah. So product,
Yeah,
nice product is great, but it's not. If there's 100,000 people using your crappy product, then there's something there, right?
that's even better.
It's better. Like, it's so bad,
Uh,
but people are still using it.
yeah, that shows the
So
need is very strong. Yeah.
yeah,
Speaking of, I mean, Uber, it's not the investors that didn't invest because the market was small, and the ones that didn't invest because the market was big. They invested because they believed in Travis, the founder, and they saw him as a brilliant founder, and it turned out they were right.
yeah. There's thousands of reasons to say no to a startup, and you can choose any one of them, and you probably would be right 99% of the time. But you want to be biased towards saying yes so that you're saying yes to the ones that are going to do really well. So that's the thing. Like, you can find an excuse to say no to every single startup all the time, but you shouldn't. As a VC, we need to be looking at reasons to say yes, not reasons to say no. So that's the whole thing. Because you'll talk to people, they said no to Uber because Travis didn't sound like he was a full-time founder. He was playing around and messing around.
Exactly.
He was already successful, and that was it. People said no because of the market size. People said no because of X, Y, Z. What, like, there's so many reasons to say no. And yeah, the people who said yes are the ones that were right.
Absolutely. Very right. And so, how do you guys at Plus VC make decisions? Are they like unanimous investment committee? I think you have one partner and other team members. Is it the unanimous? Does each partner choose their investments? How do you make the and what's the typical if a startup reaches out? I mean, what's the typical process? How does it go? First meeting, second meeting, and
Sure.
then
Yeah. No, unanimous leads to groupthink, leads to people missing out on non obvious outliers. There might be something that you see as a partner that your partner doesn't see. You should be able to follow that lead to see where it works. Because if everyone agrees on everything, you're not going to be investing in these opportunities, which are where the real um, alpha is, where the real returns are going to be. So I don't believe in unanimous investment decisions for first checks. I think first checks, people should be able to advocate for a deal, and if they really believe in that deal, they should go ahead and invest in that company. And
right,
so we run an advocacy based approach. We try to get to consensus. Obviously, we're not just going to be jackasses and decide on whatever deals we want. So we try to get to consensus as much as possible, but at the end of the day, we can advocate for a deal if we really strongly believe in it. So it's an advocacy based approach. Most of the time, we are in consensus, but in edge cases, when we're not, we follow the advocacy model. That's for first checks. For follow-ons, because we do larger checks for follow-ons, bigger allocation out of the fund, etc. There we do operate by unanimous consent because we're putting more money to work in a fewer level of opportunities. We want to be sure that we're not just too in love with the deal that
yep,
that
yep.
we did. And so we do a unanimous decision making for follow-ons.
Got it. And there is
How
kind of signaling risk as well. I mean, in the follow on, because if you don't invest, that's also might be a signal for the other Series A
No,
investors.
no. I think most of the investors know that we're not super active in our follow-ons. And we wouldn't lead a follow-on anyway, and we'd wait until someone else leads and sets terms and stuff. And we aren't big investors even in the follow-on. So we're not, it's not a signal. Like, there are deals that we love that we just aren't able to follow on in, and that's the reality of it. So yeah, it's not a signal. We love all our children equally.
After all, they're all our children. So I wanted to ask you about. I mean, you set up the fund. I mean, you're based in Bahrain, but you set up the fund in Abu Dhabi, and of course, Abu Dhabi
Yeah,
is a rising startup hub.
Abu
Why did
Dhabi
you
is
make that
great.
decision?
So Abu Dhabi honestly was one of the best jurisdiction for us as a VC fund to set up. We're regulated by the FSRA. They've been great as a regulator. It's easy, it's straightforward, and it's just a nice place to be operating out of. So we're pretty happy with Abu Dhabi. And a VC fund is not the same as more traditional asset classes, right? We have smaller teams, we have leaner operations, we're targeting a certain segment of society that has larger AUM and a larger check size. So we don't have as much systemic risk on the rest of the ecosystem as other assets do. And so Abu Dhabi understands all of that. And so ADGM, it's a really great place to set up. And it made a lot of sense. As an emerging manager, especially with limited capital resources, like it was perfect. So Abu Dhabi was a good jurisdiction for us.
Cool. And you meet a lot of global investors who come to the region or are interested. I mean, how do they see the region?
They see it as dollar signs, I think.
So they're here for the LPs, not for the startups.
Honestly speaking, let's see. So 21, 22, when things were going crazy in VC world, there were a lot of investors looking at the region because they were looking at the next sort of where can we deploy all of this money that we have, right? Now it's the flip base. Like we need to raise money. Where is there pockets of money that we can raise from? So the investors that were coming in earlier, I would complain about because, oh my god, they're giving these startups crazy valuations. It doesn't make sense. It's not sustainable. And I was right. It didn't make sense and not sustainable. And now I'm complaining. I was like, oh, these investors aren't really here to invest in our startups. They're here just to take our LP money. So I'll complain no matter what. Like I'm very that's all. There's always a reason to complain. But honestly speaking, getting more late stage investors that are going to be active in our region is something that we need, especially global managers that can really help our startups scale and go global. I think this is something that we were discussing a while ago, where how come we don't have more unicorns and decacorns? I was like, how many people out there in our region can deploy a 50 or $100 million check? The answer
Exactly.
is almost no one, right? Like, is maybe one or two investors that are private equity firms that can maybe do it, and maybe some banks can do SPVs, but in general, that those pools of capitals don't exist in the region. And
Yep.
so, yeah, the more the merrier, honestly speaking. I think the more people that are looking at our region, and honestly, they should be looking at our region. I think this is. I wouldn't be investing anywhere else. I think this is a region that I really believe in. I think this is the next region to emerge. It has classic signs, similar to how China emerged, how Southeast Asia emerged. The MENA region's following that path almost exactly, and so pretty excited. The people that invested early in those markets did really well, and a lot of the gains came from the local managers. So I think, if you invest early in local managers, I think you'll be doing pretty well in the region as well.
Yeah. I actually also I compared to Latin America, so we're kind of a few years behind them, and
Latin
they went
America's had starts and stops and a few times here and there. But Latin America, I think, is probably worse off than here because they have even less pools of capital that are investing into their startups. There is more money from the US that goes there because it's geographically closer,
exactly,
but
exactly.
not that much. Like LATAM is a huge market that I think has been ignored for quite a while.
Yeah, with one language, and I think in 2020, at the peak of the good times, they had like
Yeah,
15 unicorns in 1 year. So that was
yeah.
actually quite
SoftBank was
impressive.
super active there.
Yep, yep, exactly. SoftBank, Sequoia.
Sequoia.
Uh,
So yeah,
yeah.
I think honestly
So
speaking, this is probably the best region to be investing in
no,
right
I
now.
couldn't agree more, and at this timing as well. So the last couple of years have been, as you kind of hinted, pretty difficult in terms of liquidity globally. We've seen less LP money going into funds all over the place, in the US specifically, in Europe, etc., and China even. How are you feeling about the liquidity in venture capital here in our region?
Oh, it's crap. We don't have a lot of liquidity. Um, we have a limited pool of LPs that are investing in funds. A lot of them are developmentally minded, so they have these closed loops. They're like, "I'll give you money, but you have to invest in my market," which doesn't help the region. And the region is the big enough market that you need to be investing in, not single markets, right? So the region needs to emerge to bring everyone's attention here, not one market emerges to bring everyone's attention here, right? So I'm very, very strong proponent of MENA regionalism as an ecosystem rather than single market.
Couldn't agree more.
Yeah, I think you end up with a lot of distortions in local markets when things are happening because X amount of money is earmarked for X country or X whatever. Um, so there isn't a lot of capital that's available to us as fund managers, and because of that there's not a lot of capital available to startups, and because of that there's not a lot of startups that are able to scale to huge valuations and huge rounds. So We need more financially motivated LPs to be active in our region. And I think that's what we're missing. We don't have a broad enough base of LPs for our ecosystem yet. It's better than it was when I got started, when it was zero, but now it's still only a handful. And if that handful says no for whatever reason, then you're stuck. Like, you can't really raise a fund or do anything. Um, so yeah, I think that's something. The U.S. really emerged, and you started to see more capital go to venture capital as an asset class when they liberalized, where endowments and pension funds could start investing. Initially, they said 3% could be for riskier assets, etc., etc., etc. We have not seen endowments and pension funds be active players in our ecosystem. We haven't seen insurance companies be active players in our ecosystem as LPs. We haven't seen a large number of family offices. Places like Europe, they incentivize family offices to get involved by offering tax incentives and things. So we haven't really got that. I think that's what we were missing. We were missing a broad pool of LPs investing in venture capital in our region. And if you ask a lot of the funds that have raised $100 million plus, a large amount of that money comes from outside the region, not
Yep.
even
Yep.
regional.
That's true. And so, I mean, since we're on this track, what do you think are the regulatory changes and legislative changes that could be useful for the governments to do in the region?
I don't know. I guess changes to where the pension funds are investing, changes to where the sovereign funds are investing. Not big changes, but here's a pool of capital. Let's deploy into our local market in BC. Here's a pool, because there's so many sovereign funds, but most of them are like, oh, our minimum check size is bigger than your fund. I was like, your minimum check size is bigger than any fund in the region. So there needs to be like these programs that are developed to financially invest in VC funds. I think Qatar is doing it with QIA now. They started, and I think we need to see more of that. Mubadala has been doing it for a bit and are restarting that program. So you need to see the sovereign funds come down to support the ecosystem to grow. From a financially motivated perspective, we probably need to see endowments and pension funds do similar thing as well, invest locally in sort of this asset class, and maybe utilize tax breaks or whatever for family offices or companies that are investing in VC as an asset class. So you motivate them to be active through that path. Maybe, I don't know.
Exactly. I mean, they can at least write it off if it loses, so that removes the risk. For example,
Yeah.
that would make a
Hey,
huge
instead of
difference.
saying this a task as tax, there's a chance. There's zero downside, but there's a lot of upside. Let me do this thing and invest in
Exactly.
VC.
Yeah. Uh, Agree again. And okay, thinking about the technology side of things. Of course, AI is all the rage all over the world, but maybe not every. Maybe it's not in every way suitable to for startups in the region, or there are certain styles of AI use that would be more suitable. What are your thoughts on that?
I think it's all BS. Whenever someone's pitching me AI first, it's like whatever. Like, are you just a wrapper around ChatGPT? That's not a real business, right? So I don't. I Whenever there's a trend and everyone's jumping into something, I'm one of those people that says to the sidelines, like, wait, this doesn't make sense. I'm not jumping in with all of you. The same thing with like Web3 and blockchain and all. Like, whenever there's the hype cycle of the season, I'm always more cautious, and I won't really jump in until either I've already invested, like I did with fintech. Like, I was invested before fintech was a thing, and the hype cycle like caught up to me. I was like, hey, this is nice. Or I haven't invested, and I'm just not going to deploy when valuations are stupid and people don't really know what they're throwing money into, right? So yeah, whenever someone pitches me AI, like, honestly, I was like, whatever. And then I was like, what are you really doing? And so there's a lot of like fake things out there that say they're AI for this or AI for that, but it's all bullshit. And so Yeah, I don't follow those trends. I think AI is going to be a super important tool for us all to use in our day to day lives. I think it's going to be similar to how word processors came about, how the internet came about, and all these sort of things. Like it'll be a tool that we use, but just saying I'm an AI business and doing X Y Z, like it's all made up, and especially most of the startups in the region are not real AI. Having said this, I invested in a couple of companies that became that when I invested, I used to hate using the term AI. I would be like, it's a machine learning company. It was so I never used the term. They're a machine learning company. They're using machine learning XYZ. Uh, but then now everyone's like hyped AI. I was like, yeah, well, we've invested in an AI business here. Like, give me the premium
There
for
you go.
that. So again, like I really hate that part of tech where everyone just becomes like all that herd mentality and everyone piles onto something just because it's the cool thing this month or whatever. I hate that. And so we we'll still invest in things that use AI or whatever, but I'm going to invest in them
Of
from our
course, I mean,
basics. Like we're going to invest from our core. Like great founders, yes. Building something real, yes. With real traction, yes. Okay. Well, it's an AI. Okay, I'll forgive them for that, but it's okay. Like let's invest
yeah.
in that sort of stuff.
Yeah, the way I put it is like it's like in the when the internet first started spreading, people used to say in their startup pitches, "We use the internet," and nobody says that. It's just a tool there. So I mean, the AI, it's everybody's going to be have an AI component or develop their code with
Exactly.
AI. I mean,
So
that's not. It's going to be like that, but there's always this cycle, the hype cycle, and
we
we
use the
just gotta live
internet.
with
We
it.
use the mobile phones. We use
Exactly.
cloud.
Use
We
apps.
use
We
Web
have a
three.
mobile app. Remember that?
Yeah.
Yeah.
So yeah, forget that. Like I really, I'm not one of those people that'll just follow the
Right.
hype. It's like, oh, AI is really gonna change the world. Yes, I think it will, but most of the investments that are in AI now are probably gonna go to zero. So no, thank you.
Yeah. As many startup investments will. So
Yeah.
you've invested maybe in over 200 startups over the years. If you could go back to your younger self and give yourself advice about startup investing, what would you tell it?
Oh, I don't know if I could give myself advice because the thing is, like, um, I think venture capital is something you learn by doing. It's learning through apprenticeship sort of program. Like you can't go to a course and then, oh, I know everything I need to know about a VC and consulting companies. No, it's like you learn under someone's tutelage and they teach you with their experiences and et cetera, et cetera, et cetera. So I think that's how VC is as an industry right now. It's a apprenticeship learning model, right? So you learn from someone who's done it before. So I guess I could go back to myself 10 years and be like, hey, here's all the things that I've learned and apprentice myself, but that's like a paradox, I guess, in time travel. But no, it's like over time you learn all this stuff. There's things that I would tell myself. I was like, look, these are false positives. Where someone worked, where they studied, those are false positives. Those are not really
Yep.
signals that things are going to succeed or not. Um, uh, yeah, I don't know.
Anything to
Like, I
avoid,
think
like big red flags?
no, I've been pretty good at spotting red flags. We avoided some big ones. um, but obviously now I know everything. I just go back to my past self and tell them invest only in these companies, and then I'd win. That's it.
That's one way of doing it. It's the best way to do time travel.
Yeah, it's just like here's a list. Put money into these companies. You'll thank me later, and then that's it. But I
Exactly.
can't. There's no such thing as time travel, so I've got to invest in a broad portfolio. Like that's the only way to make sure I generate returns regularly.
Yeah. Yeah. I mean, I think that's good advice. Just you have to do it and you have to practice at it, and things will get clearer. And don't and avoid your biases. Like, yeah, exactly. Learn by doing and mentoring if you can. So, what do you think are the personal characteristics that made you want to be a VC, or that helped you as a VC?
I think I just don't have any other marketable skills.
Mm-hmm.
No, I think I like to learn about lots of different things constantly. I'm reading constantly about lots of different things, and so I this part of it is like I'm not just stuck doing one thing. I'm helping lots of different companies with lots of different things in lots of different sectors. I'm learning constantly from the founders that we're investing in. I'm picking up those lessons. I think that's what it is. Like venture capital is a constant learning journey, and you got to read and you got to talk to people, and I think those are the two skill sets that are really really important in VC. So talking to people to make sure you build the right relationships, and reading so you kind of know what you're talking about. And
Yeah,
I think that's
yeah, two
simplified,
very
but I think
important
those
skills.
two,
And,
yeah.
and what do you think are the? I know you're sector agnostic at Plus VC, but are there any sectors that you think are really promising in the region?
No, I think if I tried to predict the future, I would fail. So I don't try to predict the future. Honestly speaking, we invest in great founders, and then eventually the markets catch up to them. We invested in fintech before fintech was even a word. We invested in a few AI businesses before AI hype kicked in. We invested in e-commerce companies and a bunch of companies and logistics and whatever. Like we invest before the hype kicks in, and then suddenly, it's great. So um, I don't pretend to know the future. I do not like predicting what sector is going to be cool now or later, because it really doesn't make a difference. As long as we invest in good founders, A, they'll execute super well and be a great company, regardless of whatever people are saying about what sector's hot or not. And B, eventually they'll end up in one of the sectors that are hot right now and stuff like that. It's like that's a question where I usually like there is no answer to it,
Right.
because it's all made up based on your own biases, and I don't have those kind of biases. I really don't know what's gonna be the next
Yeah,
big
the
thing.
great founders will tell us.
Yeah, exactly. They'll
Yeah.
figure it out.
So what's the quickest investment decision you ever made? Can you tell us a story about that?
Uh, I make decisions pretty quickly. So in my head, like within the first 10 minutes of a conversation, I've already decided whether I want to invest or not. But I go through the process just to make sure there's nothing I've missed, there's no flags or anything like that. So I'll never like I'm in. Where do I sign? It's in my head I'm in, but let's go through the process and make sure that it's all there, right? But generally, whenever it's a founder that I've already invested in comes back to me and they did a good job for me, or they had really good mm, ethics or whatever working with me, I would probably follow on and invest with them again. The other thing is, if it's a referral from certain parties, it's usually an easier yes, because I trust that they've invested and they I've I've done well co-investing with them, so I'll probably co-invest with them again. But it's never I will never say to anyone, okay, I'm in a first call. Like I'll be in, but I won't tell anyone that okay I'm in.
Right. And have you learned, like, with experience, to trust your intuition more in that respect?
Oh yeah, for sure. I've learned what not to do and which founders not to be backing. It's a constant iterating process, so you keep learning from everything that you're doing. But yeah, I've learned what sort of founders to be looking for a lot better. I've learned, and venture capital is one of those industries where you're kind of. I love data, but there's not a lot of data to go on at the early stages. You're kind of investing in people, and so what kind of people is you just have to learn through experience, I guess.
Yep. And in the region, I mean, the an important thing for startups, you have to have exits, right? For money to be returned to the LPs. Yeah. What are the different exit options you see, and are there more things appearing on the radar?
So for us, it's pretty cool because we're seed stage investors, right? By the time a startup gets to Series B or like 100, $200 million valuation, we're already doing pretty well on our investment by then. And so what we've seen in the region is there's usually a pretty active secondaries market at the later stage. Whoever's coming in at that stage wants to acquire as much ownership as possible and wants to buy out some of the earlier investors. So liquidity through secondaries is something that we've seen and we've actually participated in. Locked in 31x on one deal through secondaries, 17x on another deal through secondaries. And I think that's my best performing deals are probably going to be secondary sales rather than M&A sort of transactions because as a seed investor, I don't have to wait until the IPO. I will wait till the IPO for some deals, but I'll start taking profit on the way there, you know?
And do you
So
sell
secondaries definitely
part of the position or the whole position
part of the
in
position,
secondary?
not whole.
Part of it,
Yeah,
yeah.
in second. But take money on the way up. I think take a little profit. Why not? 30x is okay. Can't really complain about 30x. 17x is okay. They're good deals.
Absolutely.
Um,
So,
so so yeah, that's our thesis on secondary. So as a seed fund, I think that's a great opportunity for us. Later
right.
stage investors, Series A and B, I think you're seeing more liquidity options emerge. You're starting to see private equity players start to come into our region, which is not always a great thing, but maybe this case might be okay when they buy us out and then they screw up the company. But as long as they don't screw up the company while we're still in it. And we're starting to see a lot more liquidity coming in through the stock market. So we've seen some pretty good exits, especially on the Saudi stock market.
Saudi,
So
yeah.
Jahed, Sun, and a few others. So I think that's I have probably three or four companies in my past portfolio that are looking actively at IPOing in the Saudi market right now. If you'd asked me this question like 10 years ago, I'd be like, there's no way that any of our startups are ever going to be an IPO. But now I was
Hmm.
like, yeah, I've invested in five companies that are probably going to IPO in the next year or two.
It's happening.
It's and then the UAE as well. There's one deal that's looking at IPOing in the UAE as well, and then Egypt is another option that's there available. If Fowry did the IPO, there might be other startups that can probably IPO on that local market. So I think you're starting to see more and more IPOs. The thing we're missing is large M&A transactions. We don't see the corporations buying into startups very much, and especially not at larger scale. So I don't know how that's gonna turn out, but maybe that's a path that's gonna come at some point in time.
Hopefully.
But yeah, my whole thesis whenever anyone was asking me, but there's no exits, I was like, there will be exits. It can't not ever be exits. Like the ecosystem is emerging and evolving and the exits will come, like it's gonna happen, and you just have to
Have faith.
just like it's a natural evolution of whatever, like it's gonna
Yeah.
happen. So
So, going back, I mean, to the nitty gritty of your work, I mean, early stage valuation, one way of looking at it is you work back from the exit valuations and you to see what's a reasonable early stage valuation. So, putting that in mind, do you see a balance between current seed stage valuations, especially in the hot markets like Saudi and UAE, versus the potential exit valuations?
no, Saudi especially, and some of the there, I think there was a massive disconnect between valuations at seed and valuations at series A and B and stuff like that. Valuations at seed just didn't make any sense. So and I think there's still some deals that are happening that don't make any sense when you look at the metrics. Like, okay, you're investing now before any metrics, before any really things are happening. In order to justify that valuation, what metrics do these startups need to get to? And most of the time the answer is like, oh crap, they're never going to be able to achieve those metrics in the next round. And so I think there's a lot of inexperience that's in these markets that has driven up valuations to a level where they're just not good investment opportunities, right? If I'm investing in a company at seed at a $30 million valuation and they don't even have product or anything right now, like for this startup's next round to be at $100 million valuation, are they going to be able to achieve those metrics for me to get at least a 3x, write up? And the answer in most situations is no. Like no one's really thought through that. They're just like, oh, it's hot, yeah, let's invest, it's okay, it doesn't matter what price we pay as long as it's unicorn. and that is bullshit. Like, it, of course it matters what price you pay. I hate that it doesn't matter what price you pay as long as it's a unicorn, because it does matter what price you pay. Most startups aren't going to be unicorns, and so if you're going to exit at $100 million valuation and you paid a valuation of 30, you're doing 3x on that deal, and that's crap. It's $100 million exit and you're doing 3x. What are you doing, right? So, and if you invested at a 10 instead, you're doing maybe 10x on that deal, right? These are not taking into account dilution or whatever. Like, if you take into dilution, put those numbers in half. But like it's a 3x versus a 10x exit at the same level. So the price you pay is entirely in your control when you're entering. The exit value is not in your control. So you need to maximize and make sure that you are paying the right price for that startup at this point in time.
But
And that's my
let,
rant.
let me play devil's advocate and say the price you pay isn't really in your control because there's a market out there. There are other people willing to
No, it's
pay
definitely your
that
control. If
price.
other people are stupid, you can just not pay that price.
Yeah, you'll have to miss the deal, basically.
It's fine. I'll miss the 3x deal. So what? Like, no big deal, right?
Yep, yep,
Not gonna be. It's not gonna return my fund anyway, right? So it's crap. Like, no, the price you pay does make a difference, and so you need to be cautious. You need to be investing at the right valuation and make sure the startup can grow into the next valuation and the next valuation after that. And startups are shooting themselves in the foot by taking they shouldn't be taking money at these valuations, because their next round will be a down round. And we saw so many down rounds last year in 23, so many down rounds. No one was talking about it. Yeah, it's a bridge round. It's a flat round. No, there's so many down rounds, just for these startups to be able to survive, because they didn't grow into the valuations that they raised at. Like,
yeah.
so,
And it's not good for the
no,
startups themselves, even that they did this.
it's not good for
Yeah,
anyone, right? So,
yeah,
like,
exactly.
but I've
Everybody
taken
loses.
advantage of it. I've invested in a couple of deals that did down rounds. I was like, actually, now your valuation makes sense. Like, they had
Yeah,
1 year, they burned through other people's investment, they got pretty good traction, but it's at a lower valuation than what they were raising at a year ago. I'll invest.
yep,
Why
yep.
not? But it's not the best position to be in as a founder. You need to be really
Absolutely,
cautious. You need to make sure that you've planned it out. You're like, okay, I'll raise at X valuation now. I'll raise X amount of money. In order for me to raise the next round at a 2 to 3x minimum write up, I need to hit X amount of traction. Can I hit that with the money that I'm raising? Yes, great. Okay, let me do this deal. If it's a no, then you need to think about how much are you raising or what's the valuation at. And usually, the what's the valuation at is a much easier factor to control than how much are you raising, right? So yeah, it's one of those things. Like I said no to a lot of deals because the numbers just didn't make sense in 21 and 22, and I was right. And so I thought I was crazy. At some point, I was like, "Am I wrong? Like,
yeah,
should I be paying these stupid valuations?" And I was seriously like considering that maybe I've just become too old in this ecosystem, and like I remember the days when deals were sub-$1 million valuations, right? So I was like, am I just a dinosaur? Am I like out of it? Khalas, am I
yeah, yeah.
expired? And thankfully, no. Like, everyone else was wrong.
Now you're feeling good. So if you could wave a magic wand and change something about the regional ecosystem, what would it be?
It would just be the availability of LP capital. I think that's it. All flows down from there, right? Like, if you want to
Right.
build a strong ecosystem regionally, you need a broad pool of financially motivated LP capital investing in our region, and that's not there. If we get that, then all the other things would get fixed. Because financially motivated is a key one, because they wouldn't invest in managers that don't know what they're doing, but they might invest in emerging managers if they had someone help them and support them and they guide them. Like, it is guidance that's needed. You don't just give someone money and let them learn. It's give them money, give them a bit of guidance, and let them learn that way, right? So I think that would so large pool of financially motivated LPs would fix a lot of the things that I think are fixable.
Absolutely. LP money is always good for an ecosystem.
Yeah,
So
but it's a broad pool. It's not just one single
yeah,
LP. It needs to
exactly.
be different types of LPs. lots of different mindsets, and all financially motivated. That's the
Yeah,
key.
that's a great point. So do you take board seats?
I try not to. I hate taking board seats. It's like a waste of time.
Right.
Uh,
Um,
yeah.
but you do sometimes. I mean, do you choose to? I was going to ask you about what your thoughts are on being a good board director. What's
Oh yeah. No, I've taken board seats when the founders have really asked me to take those board seats, and um, yeah, it's only because they really asked a lot, and they're like, "We really want you. We really need you." Then I eventually give in, and say, "Okay, I'll sit on your board." My role as a board member is usually really to support the founders, to make sure that they're going in the right path. They have a smooth board. Everything's working well. That's what I would do. But honestly speaking, at seed stage, it's stupid to take a board seat. Like the company's not even fully formed. Like, what are you going to hold them accountable to? So um, governance is super important, and I think that's something that definitely needs to be there when you're playing at Series A and B, and higher than that when there's millions of dollars at stake. But at seed stage, these startups aren't even fully formed, right? So they need the ability to pivot, to figure out things, and all you're getting yourself into at seed stage is a headache. I used to take board seats at seed, and I don't want to do that again. It's just not worth it. So we provide as much value as we could on the board, but we just don't take that seat. We tell you we guide with we support with fundraising, we support with guidance, whatever you need. We're here, we're present for our portfolio companies, but I don't want to sit once a quarter. Like what value am I gonna give at that stage that's useful? Like I want more regular interactions. Let me help you when you need help rather than uh, let's sit on a board and meet every quarter or whatever.
yeah, it
So yeah.
makes sense, of course, with your huge portfolio. And uh, what are the characteristics of the best investors that you've seen?
Uh, I don't know. I think best investors. Mm, I think the best investors play two roles. One of them is support the founders to get to where they need to go, and that's in two ways. One is provide the resources, but also the guidance and the help, and just the mindset that the founders need to get to where they need to go. And sometimes that's like tough conversations, like, "Hey, why aren't you? What's going on with growth? Why haven't you expanded into Saudi yet? Uh, what's stopping you? Oh, yeah, your product isn't ready yet. Well, you didn't even have a product when you launched in your home market, so why are you taking so long? Just go, like, kick your ass and get into that market. Like, be uncomfortable, you know." Um, a board member should never tell a startup what to do. They need to be there to encourage, advise, and help the founders to find the answers themselves. I think that's the thing, and hold them accountable for the questions that they want to ask. And I think that's important at the early stages. At late stages, it becomes more of a you gotta it's a financial
Governance and
fiduciary.
stuff.
You've got to do with governance stuff. So it's different board roles at different stages. But at the stage which I like, it's really that you gotta just hold them accountable and be there to help them get to where they need to go.
Okay. So let's start getting ready to land this plane. Maybe we can do some quick questions to wrap up. The first one is: what book do you like to, or books do you like to recommend to others?
Oh, uh, I read mostly science fiction books. I don't know if people would really like the selection, and they're old books, like Dune and stuff like that. So I really love old Asimov series, like any very geeky science fiction book stuff. Um, Even like Douglas Adams and all these sort of things. So, but anyway, like um, for VC stuff, I guess the hard things about hard things is pretty good. Uh, yeah, I don't know. There's a lot of really good books. I read a lot, so I don't need to have like one book. And I guess the real suggestion is read a lot of everything as much as you possibly can. Like read short articles of about everything, and like that's probably super valuable now. No.
Okay, second question. How do you unwind and how do you stay like energized?
Oh, I watch a lot of TV and movies. So that's pretty much
You
it.
still love that since your first startup.
Yeah, I'm always gonna love that. Like that's my thing. TV and movies, especially science fiction shows. I'm a geek, so like I love that stuff. Uh, I used to read comic books, but I don't have as much time anymore as I used to. There's some really good comic books out there, like super good ones, like Sandman and stuff. But I just don't. I don't have that time to to read those. So I read the other stuff, which is useful, and not so much the comics anymore.
Yeah, yeah,
And I play video games with my kids. That's always fun.
yeah. That's fun. That's actually a lot of fun. So, who do you think we should have as a guest on the podcast?
Uh, Everyone. I,
Any
I think
examples?
I think probably reach out to some of the top founders that have been able to really get their companies to 100 million plus valuations, and I think a lot of them haven't really told their stories as much as they should. And I can give you a list of 20 of them that if you'd like. But yeah,
Sure.
I I think we're not seeing those stories as much as we should. We're seeing some stories over and over again, but we're not seeing all of the stories.
Yeah, you're right. So, what question should I have asked you that I didn't?
Uh, I don't know. I talk quite a lot, so I'm pretty sure I answered questions you didn't even ask. So, uh,
No, I mean,
I don't know. Like, yeah, I think you asked the right questions. All good.
okay. So I like to always wrap up with on a note of gratitude. So, what is a gift somebody has given you that has made a positive impact on your life?
I think it's time. I think it's the mentors that really gave me their time and their attention. Sami Jalal, Fawaz Al-Ghaslibi, Dave McClure, like they've all really. It's that time and attention that's helped more than anything else. I think that's really the key thing. So time is the most valuable gift.
Yeah, time and their wisdom, sharing their wisdom. That's a great note to end on. We should all be trying to spend, some of our time helping others and sharing our wisdom with them. And with that, thank you very much for your time, Hassan, and for your wisdom. Thank you for coming on the pod.
Thank you for having me.
Thank you. Thank you for listening to this episode of Startups Arabia podcast. If there was something you really liked about what the guest said today, reach out to them on social media and tell them what you liked. And of course, if you haven't subscribed yet, what are you waiting for? You don't want to miss any of our great upcoming episodes. Also, please rate us and give us comments on our social media accounts so that we know how to improve. And also tell us what you like. We don't mind hearing that either. Until next time, this was your host, Ali Zwail.